Dzień dobry, Artur Wiśniewski, stockbroker.pl, to jest pasywna rewolucja. Witam Was serdecznie. Dzisiaj będziemy mówić o tym, jak zbudować pasywny portfel funduszy ETF, o tym, jak wybrać najlepsze ETF-y do portfela, jakie klasy aktywów powinny się z nim znajdować oraz na temat tego, czy lepiej inwestować samodzielnie, czy z wykorzystaniem robodoradcy. Dlaczego robodoradcy? Dzisiaj mamy wywiad. Moim gościem będzie Johan Hellman, który reprezentuje firmę, która jest jednym z największych robodoradców w Europie. Będziemy mówić po angielsku, postaram się mówić prostym językiem, żeby było to zrozumiałe. Jakbyście mieli jakieś pytania, proszę dawajcie znać w komentarzach. Najlepiej po angielsku, to nam dużo ułatwi. Zapraszam Was serdecznie. Hello, Johan. How are you?
Good morning, Artur. I'm very well, thank you. And thanks so much for inviting me to this show.
First of all, how should I introduce you? Are you from ETF-matic or Ion Bank?
Oh, that's a very good question. I think I'm very much both. As you're aware, we were recently acquired by Ion Bank, but ETF-matic remains an independent entity within the larger Ion group. So that is the hat that I'm wearing.
We can shortly say that ETF-matic is robo-advisory company. What does it mean? What does it mean, robo-advisory? I go to your office, and instead of a man on the chair, I see the robo. What does it mean, the robo-advisory?
I think robo-advisory means a lot of different things. It's a catch-all for activities within I would call the online investment management space. And in our case, what it means is it's a personal management service that they interact with through their phone or their computer or their tablet whenever it's convenient for them. And what it allows us to do is to provide a service that is customized down to each individual client.
Okay, so what you basically do is you help people invest in the financial market in ETFs, but it doesn't work like this, that they choose ETFs by themselves, but you help them build their portfolio. Am I right?
Very much so. We help them build the portfolio, and and we also then, once it's built, we manage it for them on an ongoing basis. And when it comes to the building part, we provide a number of different investment portfolios. We have what we call our starter portfolios. We also allow clients to do a custom portfolio, and we have an adaptive portfolio proposition, which we've developed together with the former chief investment officer at UBS. So we have a range of different propositions that we allow clients to select from, and to pick the one that matches what they want to do and what they want to achieve, not just in terms of outcome, but also in terms of the risk that they're willing to take in order to get there. And I think that's a very important consideration here. Not every investment is suitable for every client.
So you say you build portfolios, and they are different for different people, depending on different features of people's needs. First of all, depending on the risk level. So the main question which comes to my mind is because okay, these portfolios can be different, but I think more or less the same asset classes should remain in these portfolios. What asset classes do you have in your portfolios? Stocks, bonds, real estate, commodities, precious metals?
So we broadly have fixed income and equities. And the reason for that is we think of equities as giving you global market exposure. And fixed income is then the safe component of your portfolio. And on the fixed income side, for our starter portfolios, we only do government bonds in your home currency. In the adaptive portfolios, we have a mix of government and corporate bonds.
Some people like to add to their portfolio gold, some other asset classes like real estate. You don't have these asset classes in your portfolios. What is the reason for that? Are they not necessary in the portfolio?
I think necessary depends on what is it that you're trying to achieve and what is it that you want to get out of your portfolio. Now, the portfolios that we present, they're looking at let's say long-term savings, medium to long-term savings. And I think if you look at commodities, you can debate very heavily whether commodities is something that's a long-term value creator, or whether what it does, it allows you to speculate in the medium to short term about fluctuations in the commodity market.
Okay, so you remain with the basic asset classes, which are stocks and bonds.
Yeah. And again, this is not to say that commodities or other asset classes cannot add value to a portfolio, but it depends on what is the portfolio, what is it that you want to achieve with the portfolio, and how do you want to manage it. Right?
Okay. As regards stocks, there are different attitudes to this case. How much of developed market against emerging markets should we have in our portfolio? What is your attitude? What do you think?
I'm going to keep on saying it really depends. Again, I take a very simplistic approach for my personal investments, and I take a step back and say that figuring out what exposure to have to developed markets versus emerging markets at any given point in time, it takes more effort than what I think it gives in value. So I take a very simplistic approach and say, I'm going to market cap weight my equity component. That gives me a global exposure. And I think also if we talk about passive versus active investing, that's where I personally say, okay, I'm happy to go the active route of saying market cap weighting, but I'm not, again, personally willing to do cherry picking between markets, because that is then going more into what I'd consider more active investing.
Okay, and how about bonds? What is the proportion which you prefer between government and corporate bonds, and fixed coupon versus inflation linked? Do you have both? Do you have all of them, all kinds? Do you change proportions between them in a time?
It's funny here. It depends if it's talking about me personally or talking about the portfolios that ETF manages.
ETF-matic.
Right. So we have both government bonds and corporate bonds. In our starter portfolios, we only do government bonds because the role they fill in that portfolio is as the safe asset class. Right? And corporate bonds are semi-fixed income, and they're semi-equity in terms of returns and volatility. Right? So the decision we've made there is to have the safe component be pure government bonds. When it comes to the mix between inflation-linked and non-inflation-linked, the approach we're taking is 20% inflation-linked and 80% just normal government bonds. Go on.
Are there periods where you have more inflation-linked or less inflation-linked, or is it the same all the time?
This is, again, on the starter portfolios, it's a fairly constant allocation there. Where we do take more active decisions is in our adaptive portfolios, and this is where to give some background, it's a dynamic allocation to risk exposure across equities and fixed income, and that is based on a quantitative machine learning engine that's been proven over time. And what that does is it basically switches risk on and risk off by increasing and decreasing your equity exposure. And that is a portfolio where very much we change the allocation to equities and bonds and the mix of corporate and government bonds depending on the market signal. Now,
So I can
as I
see
mentioned,
we have,
sorry, go on. Go on.
please. As I see, your attitude to portfolio is very conservative. As I could also say classic. You are very market cap orientated. So we basically know how do you build your portfolio. How do you? What is your vision? So once we know these basics, how do you choose best ETFs to your portfolio? The first question which comes to my mind is how many ETFs should we have in the portfolio? There are some people who say that the number of ETFs which we should have in a portfolio, which we can start with, is actually one. So how many ETFs should we start with, and how many ETFs do you have in your portfolios?
Well, I would challenge the one, and I'd say two. Right now, the people say that it's enough with one ETF. What they're typically referring is an MSCI All Country World Index type equity exposure. You could add to that the corresponding Barclay aggregate bond index, right? And that should be enough. What I would add to that is that yes, you could do that. However, the MSCI All Country World Index ETFs that you get, they're typically priced somewhere around 60 to 70 basis points, right? Which means that you're paying quite a lot for that exposure, right?
So, if I understand well, you use more ETFs, and this way you lower the costs.
Exactly. So in our case, what we've done is we've found again on our starter portfolios on the equity side, we've found 6 indices or 6 regions that more or less correspond to the All Country World Index. So that's, in our case, it's obviously the US, which is in any market cap weighted is going to be the highest component, and you can find US ETFs where you have an expense ratio of down to 5 basis points, if not lower. And this is where the argument around the All Country World Index being at 65 basis points, if the US is 60% of that component, you're paying more or less 62 basis points, way too much. Right? The other regions that we then have would be the UK, Europe ex UK, emerging markets, Japan, and Asia Pacific ex Japan. So that's how we've decomposed the All Country World Index into something that, taken together, allows you to have a balanced portfolio with a very low underlying cost to own.
Okay, you mentioned also the regions which you are concentrated on. How do you select ETFs? Which features do you take into account? I don't know, brand, size, etc.
Obviously, the credibility of the issuer, the liquidity, and almost before before that, the underlying cost. What you then have are tax considerations. So you have choices between ETFs that are domiciled in different countries. You have the underlying currency of the exposure of the ETF. You have the accounting currency of the ETF. You have the tax treatment and tax agreements between the country where the ETF is domiciled and the countries where the assets are held. And then you have things like accumulated versus distributing ETFs. So very, very long list. But if I was to generalize,
so if you mentioned this detail, I mean, dividend policy, if the ETF distributes the dividend or accumulates it, which one do you prefer?
I would prefer all things equal.
Okay, maybe I can ask in different way. As far as I know, you have mostly distributing ETFs.
Yeah.
And this is one of the things I was wondering, what was the reason for that? Because for me, as an investor from Poland, it's if I was to reinvest it myself, it's less comfortable than if it was accumulating ETF. And on the other hand, and also the second thing, I need to calculate from the dividend. I need to calculate the tax myself. So these are two disadvantages for me as a Polish investor. So what was the reason for you to prefer distributing ETFs?
So tax is obviously a consideration, and this is where I think we will see a lot of evolution. I think distributing versus accumulation is one of the considerations, where you have different tax treatments. And as you say, in Poland, there's one tax treatment. In other countries, there are other tax treatments. Another consideration here is synthetic versus replicating, where there's also different tax treatments country by country. Now, we've chosen to primarily have physical replication, and we've chosen to primarily have as you say, dividend distribution. Now, the dividend distribution is a way also for us to do portfolio rebalancing. So what we do is when the dividends come in, yes, there's a dividend tax on that, but what it allows us to do is also to rebalance portfolios to keep them in line with what the client has said they wanted the proportions to be, without selling off assets and incurring the capital gains from that. So it's a bit of a balance between being able to rebalance without having to liquidate positions or partially liquidate positions, versus taking the hit on capital gains. On the taxation on the dividend distribution itself.
And what about the replication? Many people, as far as at least in Poland, they don't understand the swap-based ETFs, and actually they also prefer physical ETFs. But one of the reasons for this is they think that, or they feel they are less safe, they are more risky. What is the reason for you to prefer physical? Is it because they are more risky, or because it's easier for people to explain what it invests in?
I think it's definitely the second, where it makes it a lot easier to say what you hold here is a basket of the underlying stocks, right? Than to say, well, what this ETF actually is a bunch of synthetic contracts, et cetera, et cetera. So that's the main reason. The other reason is what I alluded to earlier, tax treatment in different countries, where different countries have slightly different views on taxation of synthetic versus physical ETFs when it comes to for instance transaction taxes and so on, where in some cases it's treated more as a derivative, and that's also where it's for taxation purposes, but also in terms of suitability for end clients.
And what do you think about hedging? Do you do you use some I don't know, euro hedged or British pound hedged ETFs?
I need to run through the rest. So across the board, I think we use something like 50 different ETFs, right? So to take a step back, the portfolios we provide them in pounds and in dollars and in euros, right? And we have slightly different ETF selection across the starter portfolios versus across our adaptive portfolios. In some cases, yes, we do use currency hedging.
In which cases? Stocks,
Primarily
bonds?
in the, off the top of my head, primarily in the adaptive portfolios. We don't use it. I'll see if someone shouts at me later on for this, but broadly speaking, we don't tend to use currency hedging on the equity side on the starter portfolios. And on the fixed income side, there is no need for currency hedging because the only fixed income component that we keep are the government bonds in the underlying currency of the portfolio. So in the USD portfolios, we keep dollar-denominated government bonds. In the pound portfolio, we keep gilts. In the euro portfolio, we keep euro-denominated government bonds. My experience is that currency hedging doesn't have any significant impact on the destination. It changes the journey you take to get there. And what I mean with that is that over the medium to long period, there is no significant difference in the returns you get from hedged versus non-hedged ETFs.
In the ETF industry, there are a few trends as regards different types of ETFs, smart beta, active ETFs, ESG ETFs. Do you consider any of these to get them into your portfolios?
Oh, absolutely. So together with Ion, we have developed, let's say, thematic portfolio, which uses ESG, has an ESG focus. And that's available to the clients in Belgium, right? And I think this is where we're very much in an interesting space because we do both our business to consumer offering through our eThematic app, but we also partner with other companies to develop portfolios with them, right? And this is where not to give too much away, but there's a lot of exciting stuff that we're looking at doing across the board with partners, and ESG and so on is very much part of what we'll be doing there. Right? I think, as you said, that there are a lot of different trends around smart beta, around actively managed ETFs. I tend to take the very pragmatic approach of saying that it's maybe not pragmatic, maybe is not the right word, but I think that what these provide are different tools for portfolio construction, right? And in general, I would suggest that most of the ETFs out there are useful tools in the right context. That does not mean that they are good as a standalone selection for an individual retail investor, because some of them can be quite complicated to understand. A 3x levered inverse exposure to gold, what does that even mean, right? Someone probably knows what that does to their overall risk exposure in the portfolio, but it's not something that's appropriate, I would say, for our retail clients. Right?
We've already mentioned rebalancing. How do you do it? I mean, how often do you do it, or when do you do it? If it's not a secret.
No, it's definitely not a secret, and everything that I mentioned here is very well documented. We believe very much in transparency. And if you go to etfmatic.com/white paper, you will find all the mistakes I've said in what I've said today, because what we do is very well documented there. So if I've mistakenly said we don't do hedged ETFs and we do, that will be there. Right? So we very much believe in full transparency on everything that we do.
We'll put the link below to the white
awesome.
paper.
And this is I think again where it's been part of our founding principle. Right? We want to be very transparent about what we do, and we want to be very transparent about what we charge for it and how we do things, so that people, don't feel that there's any magic to what we do. Right? On the side of rebalancing, we do what I'd say is opportunistic rebalancing. So for portfolios below 20 or 25,000 euros, we let them run for a while, right? And then after 6 months, we look at whether they need to be rebalanced. Because again, if you're constantly rebalancing every day, then you're generating an unnecessary amount of taxable transactions or taxable events on the client portfolio. So we try not to do that. When it comes to the actual rebalancing, we provide for a 20% tolerance band. So as long as your exposure is plus minus 20%, not percentage points, but percentages within target, then we go, okay, this is within what we think is reasonable to expect given how markets typically evolve. Right? When they go outside that, we will rebalance down, not to the exact target, but to about 10%. And again, that is because we don't want to overcompensate. We know that markets evolve, and there's a bit of flexibility here. For portfolios above 25,000, we do this evaluation every day.
We are heading to the end.
Indeed.
I would like to ask you in the end, because there are more than 2,000 ETFs in Europe. You use less than 10. Is it better to invest on my own or to use robo-advisory, or who is robo-advisory for?
I think that obviously it's better to use us, but I think it also depends on who you are, right? So there's and what it is that you're trying to achieve. What we do, as I said, is something that's super transparent for people who know what they should be doing but don't have time or don't have the discipline, right? We provide a very straightforward product, and we look after that in a very professional way. As you said, there are 4,000 ETFs. Which ones should you 2,000 ETFs in Europe? I think we have access to about 4,000 on our platform that we could include in portfolios. Which S&P 500 ETF should you be using if you go trading now? Well, there's a bunch of them. We pick at any given point in time, or on a regular basis, we review which is the most appropriate one, and we make sure that that is the one that we're using. We take care of that sort of what most people think is boring and frustrating, decisions around distributing versus accumulating, rebalancing frequencies. We look after portfolios in a very transparent but professional, automated way for people who know what they should be doing but don't have the time. And I think that's broadly speaking, your time is better spent pursuing your hobbies or your career or your family than looking into the minutiae of the individual ETF, unless that actually happens to be your hobby.
Okay, let's look at this case from the point of view of Polish investor.
Yep.
We don't have euro, we don't have pounds, we don't have dollars, we have Polish zloty. Our currency is Polish zloty. So when we send you money to manage our funds, the risk currency doesn't add too much to shouldn't add too much to stocks.
Mhm.
But as far as I know that the research, it puts much more risk to the portfolio. So can we say that for investors like us, from for example from Poland, where we have Polish zloty, such services like robo-advisory from served by a company located abroad is dedicated to investors with a higher risk profile?
Oof, I wouldn't necessarily agree with that. I think it's a question of understanding what is it, what risk does actually that currency exposure really represent, right? I mean, I'm Swedish myself, so I also come from a country that doesn't have the euro as a base currency. It doesn't have the dollar. It doesn't have any of the currencies that we provide. So I have similar discussions with friends and family back home, and I think there are a couple of things there. I think we touched upon currency hedging. It doesn't really change the returns that you see in the long run. I think if you look at then the safe component of a portfolio, no, because we typically don't manage 100% of our clients' assets, right? So and this is where we don't formally do advice. We do portfolio management. We do all of those things, right? So you have to look at it in that context, right? I don't I don't think that it's only for the very high risk appetite clients. I think in general you should look at how much of your wealth do you have allocated into different asset classes. Right? We try to provide a solution that works for everyone. Right?
Okay. Last question from myself.
And with that
Sorry.
said, yes, I'm very well aware of the challenges with the Polish zloty and the access to broader capital markets and the currency risk. It is something that we're looking for various reasons. It's something that we're looking quite a lot at.
Okay, so the last question from my side. There are also two questions from our viewers. Robo-advisory versus multi-asset ETFs. There are some ETFs which offer stocks and bonds inside, which is more or less the same as a robo-advisory. Can we say that it's more or less the same? Which is better to choose, multi-asset ETFs or robo-advisory?
I'm obviously going to say robo-advisory, and the reason I'll say that is because I don't think there's a huge difference in cost, but I do think there's a big difference in service. Right. So if you look at a typical multi-asset ETF, that will typically be an expense ratio which is similar to what we charge plus the expense ratios of the underlying ETFs. But what you don't get is that sort of personalized management of the actual portfolio, on top of which you would actually have additional cost of trading and execution that you don't have with someone like us. Right? So I don't know the exact numbers, but I think if you look at the Polish market, if you look at the brokers there, if I remember correctly, typical brokerage fees would be somewhere between 5 and 10 to 15 euros, I believe. I think I've seen numbers between 20 and 60 zlotys. That is a cost that you don't have with someone like us. So yeah, sorry.
Thank you very much, Johan. We have a few questions from our viewers, so maybe we can quickly look at them. Maybe we'll manage to get some answers. Question from Jay-Z. I read that ETF-matic will be taken by any other company. Am I right? If yes, what will be changed if you offer for us in Poland?
I imagine that refers to the acquisition of us by Ion. Yes, we have been acquired by Ion. What will be changed in our offer in Poland? Our offer in Poland will not change. What I can say without giving too much away is that Ion is looking at revolutionizing banking in Poland by themselves. We will be supporting them in that, and we'll be supporting them in finding solutions that are adapted specifically for their client base in Poland.
Thank you very much. A question from Megas. What are your results comparing to all world ETFs?
It's been a while since I looked at that, but broadly, what you would expect, we have the same underlying returns, but we have a lower cost base to achieve them. Right. So, if I remember correctly, the weighted expense ratio of our market cap weighted equity exposure is somewhere 12 to 14 basis points. The all country world index has something like 65 basis points in total expense ratio. So that's where you will see how a portfolio that's broken down in that way gives you a lower total cost of ownership.
Okay, and the last question, quite technical. Will you move from Barclays, Saxo to Ion as a custodian?
How do I answer that? We work with Saxo as a custodian. We would expect to continue to work with Saxo as a custodian, simply for the reason that Ion themselves aren't a broker, right? With regards to Barclays, there's a lot of overlap in the services provided by Barclays as a bank and Ion as a bank, and we're looking at how we can reduce the cost to our clients.
Thank you very much, Johan. Megas is also thankful for your answer. I think he or she is satisfied with your answer. I also thank you very much for this conversation. It was very interesting for me. I hope it was interesting for everybody. I hope we'll see again, and we can move on with the discussion to our Facebook group, Passive Revolution, or in Polish, Pasywna Rewolucja. And now we can just say goodbye. I can say goodbye in English. Bye bye in Polish.
Bye bye.
Do widzenia. And in Swedish,
widzenia.
how should I say? How should I say bye bye in Swedish?
Hej då.
Hej då.
Hej då. Thank you so much. It's been a pleasure.
Thank you very much. See you next time.